25% of advisors have been asked in the last month about crypto. So at least 1 in 4 just this month has been asked, hey, why aren't you buying me crypto? I hear there are these things coming out. So all of that conspires to, let's just do simple math. Let's say it's 10 basis points. It's a reasonable expectation. Just dip your toe in 10 basis points. That's $30 billion on an asset that trades $8 billion a day. Now, to Michael's point, if BlackRock does have the $2 billion, which I have no doubt they do, and they try to put it all in tomorrow.
What has happened in the last 40 hours will go down in history books as a watershed moment for Bitcoin and the whole digital assets sector. United States Securities and Exchange Commission, so 11 spot Bitcoin exchange traded funds, were formally and finally given permission on Wednesday, after over a decade of repeated denials and months of continuing discussions with applicants. Successful applicants included representatives from illustrious firms such as Bitwise, Hex, Valkyrie, Arkansas Invest, Invesco, Galaxy Vanek, Wisdom Tree, BlackRock, Fidelity, Franklin Templeton, and Grayscale. The proposals were found to be in compliance with the Exchange Act and the relevant rules and regulations that apply to a national securities exchange, according to the Securities and Exchange Commission (SEC), which had been waiting for these approvals for quite some time. Bitcoin futures values would likely be similarly affected by any fraud or manipulation that affected spot Bitcoin market pricing, according to the documents. This statement alludes to the judge's decision in Grayscale's lawsuit against the SEC, in which the firm is challenging the agency's initial rejection of transforming its Bitcoin trust into a spot Bitcoin ETF. Given that the SEC had previously authorized Bitcoin futures exchange-traded funds with similar risk profiles, the judge ruled that the agency lacked jurisdiction to reject a spot Bitcoin ETF on accusations of fraud and market manipulation. In spite of the reluctantly granted approvals, all 11 Bitcoin ETFs are up and running, and in the first few hours of their launch, they have registered trading activity totaling billions of dollars. Crypto enthusiast and prominent hedge fund manager Mark Yusko, who also founded Morgan Creek Capital Investments, has publicly expressed his belief in cryptocurrency's potential. Nevertheless, this marks the commencement of an array of significant landmarks. It is Yusko's professional view that the current bull market may end before the transition from trading volumes in the billions to potentially hundreds of billions of dollars takes place. Advisors at Merrill Lynch, Hughes, and Schwab are responsible for the management of around $30 trillion. Yeah, I see. Without a doubt, it's a substantial sum. Additionally, during the current era, the average advisor's exposure to cryptocurrency is below 3. Even more so, companies like MicroStrategy and others own the great majority of it. The majority of financial advisors, 90, believe that exchange-traded funds are more important than mutual funds when it comes to managing their clients' assets. 20 years ago, there were no such things as individual stocks or bonds. 205 years ago, this is about exchange-traded funds. This means that most of those $30 trillion have zero exposure when you add a large underweight to digital assets. Simple arithmetic is all that's required. Assuming it's 10 basis points, what then? That is accurate. It is a reasonable expectation. No more than 10 basis points should you test the waters. When applied to an asset that trades hands for $8 billion daily, that works out to $30 billion daily. In answer to Michael's question, I can assure you that the $2 billion are in BlackRock's possession. I am quite certain about this. They want to get everything finished by tomorrow. There is a lot of room for pricing variation. Taking 3 is not possible for us. Truthfully, I anticipate a $3.5 billion trading session tomorrow. It had been a while since I last used that number. The first day will see the receipt of $3.5 billion. This is when things become tricky. I mean, a real problem. Just so we're clear. Be that as it may, the reality is that 10 basis points will not be the case. 100 basis points or when is hardly an astronomically large sum, so keep that in mind. Not tomorrow, but over time. To underline Michael's point, you're talking about 300 billion, educating people and having nice ads and all that good stuff takes time. At first, Ubbs and Merrill included it in their model portfolio. That was enough. You can't possibly choose not to have it in your role. As an advisor, can you? You have a duty to fulfill that obligation as a team member and a fiduciary. You had to buy the one that made the most money when you were little. That, however, is a thing of the past. It would appear that there is some form of kickback occurring, though. Such a thing may happen, of course. However, you are now presented with 11 possibilities, and a substantial amount of money will be invested on these things. This is some strange data. $1 billion was raised by Beto on the first day alone. But even though they've shrunk by 31 since their inception, there are still 950 million people today who are considered a billion. Also, they came back somewhat from a 75-point deficit. Well, that wraps it. You have to take into account the fact that it is an awful building right. As a result, its roll yield is negative, a horrible structure, and a lackluster performance characterize this whole affair. The boost to $300 million ensured, however, that it still managed to attract over $2 billion. And they managed to raise an extra $1 billion on top of that. About 7 million people became 2 billion after that in my estimation. Not only that, but it quadrupled that. You can see that there were 2 flushes, that is to say, you might have missed the day for the tweet or whatever it was, because there were 2 major liquidity flushes in the last week. The first one happened on the Matrix port, and the second one happened on the Oops. I care about it because I think it was done on purpose, even though it doesn't actually matter to me. The idea that it was only a dress rehearsal for tomorrow's real event is the most terrifying thing to me, but I really do think that's what happened. To be completely honest, I think it was more of a brief practice session. It would seem that the SEC is a complete moron without a doubt. Even your own social media accounts aren't safe with you, aren't they? Attempting to make it about cryptocurrency and then adding, look, the cryptocurrency market is manipulated, is much more amusing. In other words, the same dreadful thing would have happened if you had tried the identical strategy with Microsoft Media or any other publicly listed company. You can't say it was a problem with cryptography. Wall Street was known for that. This is another crypto issue that requires fixing, same to when FTX went down. I would eventually tell them, no, that's a bad person doing bad things. That takes care of cryptography. The individuals implicated in the Senel incident accomplished precisely that. Those people behaved in that way during the junk bond crisis. Those who do evil are evil in heart. Crypto, they're always trying to paint us in a negative light. In my opinion, ultimately, the media, which is controlled by the same people who control finance, will portray this business in a negative light whenever possible. This is due to the fact that financial services are being transformed by blockchain technology and cryptocurrencies like Bitcoin, just like the media and commerce were transformed by the internet. A singular entity. Not to mention that it seems impossible to stop, doesn't it? The fact that banks have been around for 838 years is something we have talked about several times on Saturdays. That was enough. The 838-year-old trust monopoly is finally over, though it won't end tomorrow. Put simply, it has concluded. You can expect this road to be filled with obstacles and assaults. The road ahead will be bumpy and full of these attacks as we go from one monopoly to another, but the money we're making is solid and might be good in the long run. Conversely, the SEC seems to be little more than a circus show unto itself. Incredible is the least word to describe it. And if all it's good for is sitting on a ledger and getting buried in the backyard, then we can all just go back to our old jobs because we have the gold already, and unlike ledgers, gold doesn't go bad in the backyard. That and what is it, isn't it, the whole point? This is all about setting up the foundation of money, which means that all global financial institutions, central banks, centralized organizations, and decentralized organizations will use this new system instead of gold as their foundation. The shift from a centralized to a decentralized model, however, will not happen overnight. As a venture capitalist, I find it utterly intriguing that there are individuals attempting to close the gap by developing these solutions. When we bring in new companies that make it easier to use new technologies, this always happens, very much so. Because as a financial institution, you are saying, Jesus, I really do not like this, seeing as how my services are currently disregarded. If Michael wants to lend Michael money, he can do so without my help. Doing it is bad for me. In what ways may I plunge headfirst into this? Someone might say I'm a custodian. One potential role for me is that of a data keeper. Somewhat surprisingly, they could work.